KRN Heat Exchanger and Refrigeration is at a really interesting inflection point. As of April 2026, it's right in the middle of a massive pivot, shifting from being just a parts supplier to becoming a major ecosystem integrator in the HVAC and refrigeration space. We're going to dig into this powerhouse shift and what it really means for the company's future.
All right, we're going to break this down into 4 parts. First, we'll get into the details of that big strategic shift. Then, we'll crunch the numbers and see what's really fueling their growth. And finally, we'll look at both sides of the story, the bull case and the bear case, to give you a complete, balanced picture.
Okay, so first up, let's get into the core of this whole thing. KRN's very deliberate climb up the value chain. They're not just making parts anymore, they're building entire systems.
This image really says it all, doesn't it? You can see the journey from being a boutique component supplier to a full-on system integrator. And that acquisition of Sphere Refrigeration in late 2025, that was a huge move, a clear signal that they're serious about capturing a 15% slice of the domestic bus air conditioning market.
See, this is how they build that moat around their business. It's not just about shipping out components. It's about getting so deeply embedded in their clients' product designs that they become indispensable. For giants like Daikin or Blue Star, ripping KRN out and swapping in a competitor would be a massive, expensive headache. Okay, so a big transformation like this costs money, right? So where's it all coming from? Let's pop the hood and look at the engine room, the expansion plans, and the financial firepower making it all happen. And this Neemrana facility, this is the absolute centerpiece of their entire strategy. It's a total game changer, boosting their capacity by a whopping 600%. But this isn't just about volume. It's their ticket to get into these really high-margin areas like railway electrification, data center cooling, and automotive HVAC. To power all this growth, KRN has put together a pretty serious war chest. We're talking a $5 billion QIP. That's a qualified institutional placement, basically raising money from the big institutional players, plus another 141.72 crore from government incentives. And with a super low debt-to-equity ratio and a strong A credit rating, they're set to grow without burying themselves in debt. So how do they protect their profits with all these fluctuating commodity costs? This is actually pretty brilliant. They have these quarterly price adjustment clauses built into their contracts. It means that when the price of copper and aluminum goes up, they can pass that cost directly on to their customers. It's a key reason they've been able to keep their EBITDA margins so stable, right around that 20% mark.
All right, let's talk about the bull case. Why are some people so optimistic about KRN? Well, it all comes down to some really tangible growth and a ton of future potential.
And look, the numbers really tell the story here. Net profits shot up 65% year over year. They just landed a 550 million rupees export order. But here's the real kicker. That massive Neemrana plant is only running at about 20-25% capacity right now. They plan to get that up to 80% by 2027. If they do, their profitability could just explode. That's what we call massive operating leverage. But of course, it's not all sunshine and roses. We have to look at the other side of the coin. The bear case really zeroes in on 3 big potential problems that could throw a wrench in the works. So what are the red flags? First, the valuation is, well, it's sky high. Second, they're really dependent on just a handful of big clients. If they lose one, it would hurt. And third, you've got geopolitical risk. Their export business in the UAE is growing, but that region can be volatile. These are the tough questions you have to ask.
And here it is, the big number, a trailing 12-month price-to-earnings ratio of around 96. Let's be clear about what that means. The market is pricing this stock for absolute perfection. There is zero, and I mean zero, room for error. Any hiccup, any delay, and the market could punish them severely.
But before you write them off because of that valuation, you have to look at their history. This is a management team that just executes, plain and simple. We're talking a 25% compound annual growth rate in revenue even before their IPO. And they hit their targets, like launching that massive Neemrana facility, right on schedule. And that execution has been firing on all cylinders lately. You've got the key acquisition, fantastic Q3 results, and the big capital raise all happening in a short span. This string of wins has pushed the stock to what traders call a technical breakout. It smashed through its old ceiling to hit a new all-time high. That's a powerful signal that the big institutional money is confident and jumping in.
So this all boils down to one critical question. We have a company with a proven, almost flawless track record of execution. But is that incredible past enough to justify a stock price that is demanding an absolutely perfect future? That, right there, is the essential tension you have to grapple with when you're looking at KRN today.